morning, everybody, and thank you for joining us today. My name is Ninka, and with me is Angela remotely, and we are going to cover all the questions that you have today. So today's session is going to be the last one of our financial statements Get Ahead series, and if you are looking at or are attending the others, the ordered one will finish tomorrow. And what we will cover is some support cases, iXBRL, consolidations, and then some questions from you. So this session is really there to help you with any questions that you do have. So I'm going to get us started with some frequent support cases, just that you can get the flow of it. But you're welcome to post questions at any time regarding the series or any other questions that you maybe have on an engagement file. We'll try to answer all your questions as far as possible, because we do believe if you have a question, somebody else might also have a question. But if not, we can also reach out to you afterwards and make sure that you are sorted. Right. So with that, I'm going to switch off my camera quickly, and we can start with the support cases. So the first support case that we get quite often is my retained earnings are not balancing. What do I do? So firstly, if we think about retained earnings, what is retained earnings? So it is really the sum of an entity's earnings from a prior period after deducting the dividends paid to the company shareholders. And if you're like me, I'm more a numbers person, that looks like a lot of words. So I did put a little bit of a table there just to give you an explanation of what is going on. I do see a question, sorry, just that somebody was struggling with sound. So if I can maybe just have, again, a hands up if everybody can hear me, or if there is issues with my sound. I've got some hands up. So if you are struggling with sound at any point in time, just go in and out again, and that normally solves the problem. Thank you for the hands. It does help. Okay, so for retained earnings, like I said, I'm a bit more of a number person. And what it does, it really is, like I say, every year you add your profits or you deduct your loss, and then you deduct your dividends declared, and that is your retained income. So over the years, it builds up. So in theory, a very, very simple calculation, actually, but it does cause quite a bit of complications due to the journals normally that's being passed close to year end. And we're going to look at some examples now. So what sometimes can happen is after you have now done your roll forward on your file, you're ready to do your next year's file, and you open your control page, you've mapped everything, and now you get this error, which is saying your financial statements and your retained earnings are not balancing. Now, everywhere in the financials, and how it works is what you map in your TB goes, obviously you map it, that then goes to your notes, and then your notes goes to the face of the financials, and that is how the system works. The only exception is your retained earnings, because what would happen is in your prior retained earnings, if you have passed a journal, then your statement of equity will keep the figure that you've had, because that was your final signed financials, and then it does a check with what your TB is actually having, and that is the difference that you have in there. So if it did work like the rest of the financials, then we would have pulled through the figure that is from your trial balance. But then you wouldn't necessarily know that there's a difference in regards to your prior Fs. And that's why this one works a little bit differently. So if you do see that error coming up, it is something that you have to fix. It's not something that is wrong or the system is not working. It does need to be fixed. So I'm going to first just quickly show you on our community page, and I will put it in the chat in our break. So I'm just trying to see this one. So this is one of the community articles that we have. It is how do I open and correct the retained income out of balance error. And there's some examples in here how to do it. So you can see this is a very old article because we already did it in 2015 and we just updated recently with a little bit more detail, because it is exactly the same as it has been for a very, very long time. So if you do struggle, then you can refer back to that. And we also covered it in our video series. So between the two, you should be able to figure it out. But let's go to my file and then I can quickly show you. There's my Get Ahead file. So I just have a few files open here. And then let's go here. So firstly, what I'm going to do is I'm going to go to my journals. So this journal I've paused as a prior journal, but let's say you have done your prior year already. I'm just showing this to illustrate to you what has happened. And now what happens if I open my file, that 200,000 will is out, and I'm not sure why, because I can see the journal is passed in the prior year. I've imported my trial balance and it is balancing. And then you have a few options. I'm just going to mark this one quickly as unrecorded. Then you have a few options of what could have gone wrong. And let me quickly jump back into my slides and I can just talk you through it. The first one is, so this was a journal that was passed in the prior year. We said we had some audit expenses that wasn't processed. So when we did the financials, we said for our expenses we debit and our trade payables we credit. So when we did it in 2023, we were very happy that that was the right journal and it gave us the financials which we expected. So there's a few things that then happen. It's very important to communicate to your clients and to ask them what happened in their accounting system, because that will give you the indication of what you need to do in case there. So what should happen is if they, after year end, they will pass the journal in their accounting system. And then what will happen is it will be already included in your 2024 opening balances. If I did this, then you wouldn't have the 200,000 out because it would be already in there. But say they have processed the journal exactly as it was, and they didn't process it against retained earnings. So they have processed it against expenses, trade payables. Then you will have to go and adjust it again because it is now twice in your expenses. It was already in 2023 and now it's again in 2024. So it's very important to take note of where the client has processed it. And then what can also happen is it can be an invoice in the normal course of business. They have already processed it. So came the 1st of Jan after your December year end, the invoice came in from the auditors, you've processed it, you've paid it, it was trade payable, and there you go. But now that then happened in your accounting system already. So then you'll have to reverse the journal as it was, because otherwise you're going to double it up. So like I say, very important in what did the client do with that journal. It normally does relate to year-end journals. We see that quite often. Or the other one that it can be is if they've processed something directly to retained income, which shouldn't be directly to retained income. Because like we said in the beginning, the only thing that really should be in retained income, barring some exceptions, is your profit and your dividends. Right, so that was the first question that comes up quite a lot, and I hope that helped. And like I say, I will put the FAQ in the chat after in our break session that you have that as well to refer back to. Then the next question that we get is, my amounts are not pulling through to the financials. Example, it's not what I expect it to be. So there's a few things that you can troubleshoot here. And like I've said, and just to reiterate, it pulls all the amounts in case, so it pulls from the mapping to the note to the face of the income statement balance sheet. So the first place to look is to make sure that the account is mapped where you expect it to be, because sometimes we expect it to be in cash, but you've maybe per accident put to other assets. So a very logical place to start is at the mapping. Is it where I thought it should be? Then the second one is, did you pass any journals? Now remember, Angela did go through the video. I think she went through the video quite in detail about the different journal types. So if you did the online learning, you would have seen it already. But you get different journal types. You get reclassification. Maybe let me jump quickly there, then I can show you as well, just easier. So if you go in here, you have different types of journals: normal, reclass, unrecorded, eliminating tax, other basis, prior period. So depending on what type of journal it is, it will affect your financials. So if you pass a normal or a reclassification journal, then it will come through to your financials. If it's unrecorded, those are normally your proposed journals, it won't affect your financials. So like this 200,000 journal that I have here won't affect my numbers. So it is important then to just make sure that your journal type is right. Eliminating entries is only for consolidations. So I will show you consoles a little bit later, and then you'll see we use that. So again, if you've used that one, then it wouldn't show up. And then the tax we normally don't use because this is not in tax. And then we have prior periods. And again, if you've passed in the prior period, but you expect it to be this period or vice versa, then your numbers won't be correct. So I would say that's the second part where you should go and have a look and see if that's maybe why your figures are not what it is supposed to be. Then it can also be that you overwrote or the file was overwritten in the prior year. Now you've rolled forward and that figure is not pulling through, it's blank. Now normally when a cell is overwritten, it has that right dot if you've got builder mode on. So you can quite easily see that it is an overwritten amount. We have made a change in our release recently, but if you now roll forward to the latest template, you will also see all those red dots that they are overwritten, where in the past it cleared it and it looked like a normal field that pulled through. So definitely a place where you can look if something was maybe overwritten in the past. And then I'm not going to go through the detail again, but if you do remember the case study that you did with Angela about the settings, your yearly, your monthly, all of that, it is important also to make sure that they are correct. So if I look here in this February, and it's maybe set to this top one to yearly, then it might not pull all your figures through. So it is important just to double check that these are correct and that it's set to your latest period. Okay, then our next question is, I want to display high totals in my note tables. So this option is not available, is not available in all your tables, but it is available in your tables that you use most oftenly, where you will have this as a requirement. Sorry, my screen is not working with me. Let's go there. So if, for example, this property, plant and equipment, because the total pull through, it might not work. But if we jump to related parties, this is a very good example of where you can use it. You'll see that you'll have tables like these. And then you might want to have a total, because especially like for this one, you have the 2 lines there. So if you right click on that and you go to properties, then you'll have an option here at the top which says show, hide, or single underline for your display totals. So like I say, if in some of the tables, this might be grayed out, and if it is grayed out, it's because if you do hide it or show it, it will break something. But wherever you can use it, you can just click on show, and you can go OK, and you'll see that that table then has a total. So you don't have to manually go and amend any of these tables. We've done that already. And then if you go to this one, maybe you'd like to have like a single underline just because it looks nice and neat if it prints, and then you can do it in the same way. So that was the next one that came up quite a bit. Then the next one that we have is the formatting. So you have formatted your financials in the current year, and when you do a year end or roll forward, then some of your formatting have changed or did not retain. So remember, there's different ways to do your formatting, and we always recommend, if possible, to use your global formatting, because that is the formatting. And if I talk about global formatting, it's your formatting that you have here. So if you've changed, and I've pressed that, so that will not apply. But if I do that, your global formatting will always be, I want to say, the master of whatever you do. So if you choose to format it in a different way, when you roll forward and update especially, then it will again run your global formatting to make sure that your formatting in your document is correct. But if you have now, for example, gone here, and let's go to home, and you have highlighted it like that, and you said, okay, you wanted to bold that for whatever reason, which is not wrong, the functionality is there to use, but then it might not retain, because as soon, like I say, you update or you roll forward, or like I now per accident press that reapply formatting, it will then rerun your global formatting to make sure there's consistency throughout. So that is quite important just to take note of the different ways that you can format, and your global formatting will always precede the other ways that you can do. The other one that I didn't have the slide of, but does come up quite a lot, is like I've mentioned now, and I'm going to mention it again, your mapping pulls to your note to your face. What we've also done is, as far as possible, we have linked these names here to the notes and to the accounting policy, so that if you change it in one place, it will change everywhere. So if I want to change PPE, then I can go to the note. Again, I can right click there. And let's say I just want it to be plant and equipment because I don't have any property. So, okay, and then you can see it will change there. It will also change here. If I go to my accounting policies, you'll also see that it changed there to plant and equipment, and also to the balance sheet has changed to plant and equipment. So it does change everywhere if you change it in this way. There is, again, here and there an exception, and that is normally if the note doesn't agree to the face. And the one offhand that I can think of is like your rights of use assets in our IFRS template. Because it is a combination note of the asset and the liability, the note name refers to leases, but then on the balance sheet you have your asset and liability split out. So there, then obviously the note name, if you change it, it will just be the note name, and the others will be, you'll have to change separately in the same way. We can also come here and you can right-click properties and change it here. But that is normally how it works and how you can change the names throughout your financials. Then the next one that we have also quite often is how can I change my year header to my text header? And just a friendly reminder on what I mean with text header and year header. So you have two header options available in your financials, and the one is this one, which we call your year header, and you'll use them like I have here, where you have a table and you have your current year and your prior next to each other, and you want to have the heading at the top of the page. But then you also sometimes have a text header, which can be just a line. And where we normally see people use this is if you just have text on a table, then you don't necessarily want the year header to be there. It is just a preference in formatting, not one right or wrong. It is really just a preference. But let me just show you how you can do that. So if I go here to my going concern, which is almost at the end, you'll see here's my going concern. But you can stand on any note and do this, but this is not typically a place where you would normally show this. And you will right click on this and you can go to set header for this note, and then you have year header, see, year header and text header there as the option. And what it will do is it will then change this year header to be a text header. So if I click on that, it's quite quick. And then I can just quickly do a print preview and you will see the change between the two. If you do put the header in, then it does sometimes, you have to make sure that there's a page break, because otherwise it will put it at the top of the page. So if it doesn't insert it at the place where you expect it to be, if you stand on the note, then you can just make sure there's a page break, especially now after this note. So say I had going concern, events after reporting period, and then I had a very long directors' emoluments note, and then you have maybe had another note where you wanted your year headings in again, then just make sure that then on the next place they want it in, you can just right click and insert it there again, and then it will show. So if I go back, you'll see there's my year header, what we refer to, and that is the text header. Okay, then my next one is my new standards are not updating. So remember, new standards are only applicable in IFRS where you have that table. So it is not for the SME clients. But what is important here is a few dates and how this works. So firstly, you have your year-end date. So my year-end date for this file is 29 February. Then you have your signature date of your audit report, which is 31st May. And any standards that are issued after the signature date, if you look at point 4. So if I have my signature date at 31st May 2024, but now a standard was issued on 1st of June, then that standard will be unticked automatically, which would make sense because it's already signed off, so you wouldn't really see it. And then it's important also to note that your effective date is always your year's beginning date. Always. So if I say it's effective for 1 Jan 2027, it means it's from year's beginning 1 Jan 2027. Another thing important to note is if you have an old file, you are also able to add your own new standards. So if you maybe you haven't updated, or you have an old file, it is important to remember that you should include all your standards up until the date of signature. And we have the other field there which you can use if you would want to. So for this one, I'm going to go to my other file. Just close this. And I'm going to open my Stormhaven file because that is my sorry, it's just by accident press the print preview, which was not what I wanted to do. So here's a table that I was referring to, which is the new standards. So you'll see here, these three here doesn't have tick boxes because my year end was in May and these were, sorry, in April. And that's why these are not showing here because they were issued before. You can tick them. So remember, this is just the guidelines, what we said. But say you have early adopted your IAS 21, then you will tick them here. And very important, you will click on the apply box here at the bottom to sort them then in the different categories what you have. So if you want any more guidance on the new standards, there is a little info button here at the top, which you can click on, and it will explain to you exactly how the whole table works. But in short, remember that it's very important that your signature date should be included. Otherwise, the table doesn't populate the tick boxes because it works from that signature date. And then you can come and amend it if you would want to by selecting another tick box, if that is what is applicable to your entity. So if you do start a file, I would recommend just put in a signature date just so that you can have your table working. And you can always go and update it later to what your actual signature date is. Otherwise, you won't see there what you need. And that was the top. Cases. Sorry, this one I already covered it with the header footers. I'm just going to double check if there's any questions of what I've covered, because then I can just rather do it now. Just bear with me. Right, so we had a question on the recording, and I'll just that person has left already, but just in general, all the recordings will be made available on YouTube again. We will also send out a mailer during next week, just with a summary on all the videos, how you access it, the e-learning and all of that. So you can look out for that, but it will definitely be made available. So I have a question. Can you please explain the effective date on the new standards again using a February year end? Okay, so let's do that. So let's say here I have a February year end. And then, so your year end date is not as important as your signature date. All the new standards that will be in there will be up until signature date. So your year end date doesn't give you, let me just go to my file. Sorry, it's easier to explain for me there in the slide. It's my file. So say your year-end date was February, 28 February, 29 February 2024, and I had something effective. Let's look at one that was effective, then I can use a practical example. So let's say this one is effective on 2023-01-01. So that means it will be effective for years beginning 2023-01-01. So your first year end, if you had a February year end, would be then 28 Feb 2024, which is the one that we're busy with now. And that's why it's here in the current year box. So if you take the effective date plus 12 months, that is our year end date, which it will first be ineffective. I hope that makes sense, Anton. So I always work out rather the year end date, just because everywhere else we work with year end dates. And then I say, right, okay, so years beginning 1 Jan 2023. So my first year end after that will be, sorry, 2023-02 ending. Yes, I hope that makes sense. Okay. Right, so with that, I'm going to jump into iXBRL. So firstly, what is iXBRL? So iXBRL is a freely available and global framework for exchanging business information. It's all about function, while iXBRL takes that function and puts it into a format that is more accessible and visually appealing for the user. So what happened is globally, they created iXBRL and then iXBRL. So like I said here, iXBRL and iXBRL is exactly the same thing. It's just the format that is different between the two. iXBRL, if you open it, it looks a little bit like development screens, where iXBRL you can actually read and understand what it says. So what happened is globally they created this framework, and you can think about it like a mapping structure. And the goal with this was to say, how can we, in different areas, different regions, different frameworks, can we have a global standard that if you talk about revenue, it means the same thing. Now, in different countries, they have adopted this differently. In South Africa, the Companies House have adopted it, and we submit iXBRL to CIPC. But then in other regions, they have used it for tax, or they've also, like in the UK, for example, they use it for tax. That's how they submit their tax returns. And the idea is in the long term that you will submit one iXBRL or iXBRL document that then can be used in all different regulators and reasons. So you will submit one document, and then say the source will need information they can pull from it, CIPC will pull information from it, and so forth. At this point, it is just CIPC that has regulated it for South Africa, just because of the requirements. If you talk about revenue and turnover in a tax language and an accounting language, it's not really as simple as a one-to-one relation. So what CIPC have mandated, and here's the requirements that they had. So if you have a PI score that's more than 350, or at least 100 if it's internally compiled, then in short, then you have to do an iXBRL file. Also, if your MOI, and it's the last one on here, if your MOI says that you must be audited, irrespective of what your PI score is, then you also have to submit iXBRL. So it is something that's here to stay. CIPC have every year, they re-look at it. Every October, they relaunch a new taxonomy for any changes that has been made. And then also they have adopted it for other entity types and companies as well. So we had companies first, we had state-owned entities, and then they added co-ops about 2 years ago. So it does grow to the different markets as well. And practically how it then works, if I'm just looking quickly again at the website to show that to you. So if you look at your IFRS board, which I'm sure you all are very familiar with, there is a tab there that says IFRS Accounting Taxonomy. And if you look at any of these tabs, you can go in there, you'll see that's a taxonomy that says revenue, it's classified as this, cost of sales classified as this, etc., etc. So like a mapping screen. And then what CIPC does once a year, like I say, the IFRS board updates it, and then CIPC takes it and they add some mandatory fields to it, which is specific requirements for South Africa, especially in regards to the Companies Act. So you will see when you open an iXBRL file that there is some mandatory elements, which is, for example, your registration number or elements like that, which won't be forming part of the global taxonomy. So CIPC taxonomy takes the global taxonomy, adds certain fields that is applicable to South Africa, and that then becomes the taxonomy that we adopt. So if you have done iXBRL before, you will know that this is embedded in our financials. And you can activate it by clicking this iXBRL button at the top. And then what you'll have is you will find a mandatory page, which is then here at the bottom that opens up. And some of the fields we can pull through, and which ones, the ones that we did, the ones that we do, like for example, your year-end date, if it's been internally compiled, all that information is already on your information store. But then there is also certain fields that we can't do because we don't have the information, like, for example, your customer code. So I'm going to go back to the slide and I'm going to play you a short video just on the validation, just because it sometimes takes a little bit long over the internet to do, so I'm going to jump through it. So like you see in this file here, that average number of employees that I click now on, and I'm just going to pause this there, it will create then like a red plus button on the side. As soon as it's create that red plus button on the side, then it means you'll have to complete, you need to fill it in or complete a footnote. And you'll see then at the top, your validate and export screen here is grayed out. So you can't validate and export if you don't have all the fields completed. And what we are trying to do is, because when you are in your software, to make all the changes that is required for iXBRL, that you don't have to come back later. So you can produce your iXBRL report and then you can submit it to CIPSI. So we've done a lot of improvements on it over the years. We've got now the online validation that works with a test portal of CIPSI, where we can prevent you to validate and export without errors. We give you errors as far as possible to really help that you can have as easy and successful iXBRL submission. So if I'm going to play this again, just that it goes a little bit on, you'll see I've typed the figure in and now my red plus disappear. And now my validate and export at the top is black. So I can now validate and export this file. So if you click on it, it will run through a few validations, being first online, it's first the caseware validations. You'll see a block pops up. And then it does an online validation with CIPSI's test portal. Now, the CIPSI test portal is not the exact portal that you are submitting to. It is a duplicate of that. So when we do update, normally 1st of October, the portal becomes live. We do a lot of testing to ensure that this actually works correctly like it should. And the test portal and the portal works the same. So it's going to run through that. And I'm just going to jump quickly to where it then gives you the warning. So there you can see it gives you then this warning, and this warning is coming from the test portal, and it says that you have a PI score of over 500, and then what we aim to do is in the recommended solution, we tell you what you need to go and do to fix it. You can also export this list if you want to, if you maybe have a few, but otherwise you can just either keep or discard the file. If you keep the file, it will go on your document manager, but there's nothing really you can do with the file because it will actually not successfully submit. So I would recommend actually to discard it, just to not cause confusion that you do have a file and then somebody submits it and it actually does have errors on it. So if I continue with this video, you'll see if I go back to my mandatory page, so I'm discarding this file, then you will see that there is a warning here to say a PI score exceeding 500 must have a social and ethics committee report. Now that's typically a thing we can't enforce you to have it on. We can't switch it on your behalf, but we can give you a warning, and we're trying to help you in that regard. So now if I go to my social and ethics committee, you'll see that it is indeed switched off and it has to be on. So I'm switching it on. And then I'm just quickly going to go on the review tags because I just want to double check that it is actually tagged how I want it to be tagged. And there I can see that it is the Social and Ethics Committee report and it is tagged in the right way, and I can validate and export again. So just on that, all the files that you do have is pre-tagged. So everything should be tagged in a way per the line items that it is okay. But if you maybe have added a line or you have renamed a line, then it would be important just to go and to change that tag. So I'm quickly just going to jump to the end here. So I can just show you the screen now. So this is then your screen after you have fixed it. So you see you sometimes still have some warnings. Like these warnings are really technical warnings. and you can submit successfully when there is warnings. It really is only the errors that will prevent you from submitting. And the warnings can be there for various reasons. Sometimes there's a change in the taxonomy which SIPC wants to introduce, but they don't feel it should be as severe as an error. They just want to start introducing it, and then it might create a warning. Or like this one is really, if you look at the error details, it's quite a technical detail of something that at the back end is not what they expect it to be. Normally our caseware warnings, but it would not be a file submission, and they will still be able to access all your information in the file that you submit. Right, so if I just go into the file, just to show you a few things here. So like I said, if you go, for example, to your balance sheet, you have this option here to review tags. And if you click on that, you will see that it will highlight it in different colors, and it will show you then the tags available and how it is tagged. It is just taking a second. I did get a warning here from GoTo to say there's some internet issues, so just bear with me. It is important to note that this is iXBRL is online, the validation and everything, so you have to be online to use it successfully. If you are not online, or like myself now where there's a bit of internet problems, then what it will do, it will prompt it a few times to try and do it online. If it's not successful, it will do an offline validation. So you'll still get your file that you can submit, but then there is a risk that there's maybe 1 or 2 errors that that we didn't pick up because you couldn't do the online validation, so that you are still able to produce that if you would want to. Right, so there you can see now how everything is now the different colors, and then if you hover over it, you'll see that it has like date of end of reporting period. So if I go again just to my balance sheet and say there's a field there, and then you can click here on edit, and it will highlight it for you like that. And then you can go and change it to what you feel it should be, if you maybe have renamed it or whatever the case might be. And this is what I referred to the taxonomy. So similar to a mapping structure, different lines that you can then select. And if you click on here, you'll get your different statements. So they have basically grouped it per statement or per area that you can then use. But like I say again, you shouldn't really need to use that function a lot, because everything is normally pre-tagged before you start the file. Then one of the support cases that we do get a lot, and again I will put this in the tag, is that my file does not validate an export, or it hangs. Now, in general, there's a few things that are important with iXBRL, and firstly is that you have admin rights on your folder. So for iXBRL file to write to your folder, it must have access right to that folder, and it must also be saved in your data folder for the scripts to run. So I'm going to put this in the chat as well during the break, and then you guys can have a look at it. But this is really very, very important. And then, like I say, make sure that your files are saved in the C drive, just because then the scripts that must run with the iXBRL is saved in the right location, and it will work. So I've got 2 questions here that I just want to quickly read that's regarding the iXBRL. So there's a question about the Social and Ethics Committee report to say that you do not need to have it inside your financials, that it can actually be a separate report. So we cannot change what is mandatory and what is optional at all. It's not something that we have control over, but it's something that we can definitely give feedback to SIPC on. We do work quite closely with them to make sure that we are aligned in what they expect to get, and then at the end what the clients give them. So this is something that we can mention to them. So the requirements to have the Social and Ethics Committee report from the Companies Act that just changed, we will definitely have a look at then for our release in October. But for as is, it's something that will be required in the file to be successful. And then the other question was just about the movement in the equity that does not automatically tax and it gives an error. We'll definitely look at that, Amay, to just double check if that is an issue. Also, just to remember, on your statement of equity specifically, you do have to have your profits and loss and your OCI lines switched on for it to have your total profit there. And that sometimes causes some of the errors. I'm not saying this is the case with this one, but just as a side note. So we will definitely look at this one as well to see if there's something there that we need to change. So that was my question. So that brings us to the end of the iXBRL. I'm going to give you guys a 10-minute break just to grab a coffee and to stretch your legs. And then when we are back, we're going to talk about consoles. Consoles is not, I'm not going to go into too much detail. It's just high level on how consoles work, when you will use the console functionality. And thereafter, we will do any more questions that there is. So I don't see any more questions on the question pane. So if you do have any, please put them in. Otherwise, this will be a shorter session and I'll just cover the consolidations. But we do want to give everybody the opportunity to ask their questions if I do have any. So let's have a coffee break and then we'll catch up again in 10 minutes time. Okay, hi everybody, welcome back. I'm just quickly going to take a second to put in the chat the two communications that I said I will. The one is the retained earnings. And then Angela's also going to put the handouts in there. We had somebody asking for it. So you should get the link to the retained earnings now. Just looking for the other one that I mentioned that I would put on for you about the iXBRL. If you have issues with your files not validating, that's the message on how you give admin rights. Right, with that, we're going to start with consolidations. Welcome back. So the consolidation functionality that is in Caseware really caters for different types of consoles. So we do have our normal console, if I can call it that, a very simple console, which is a holding company and then some subsidiaries, subsidiary A, B, C, and it's a very simple console structure. We do also get clients that sometimes use this functionality if they have divisions, especially if their accounting systems are separate. Then what they do is they actually create, they use this functionality to as subsidiaries to import different TBs. So this is a very simple structure that, like I say, that we can do. And then you can also potentially have a structure like this, where you actually have a console within the console. Now, in general, it is very important to note how Caseware is set up is that you actually work from the top down. So what you would do in this case is you will complete subsidiary D, subsidiary E's financial statements, and then you will do the console on subsidiary C, because you would want to link those two files into subsidiary C ideally. And then you'll most likely do subsidiary A, and then you'll do the holding company where subsidiary A and subsidiary C, which then includes subsidiary D and subsidiary E, will be included in. So really that is the aim, to work from the bottom to the top. Now, some console structures are definitely more complex than others. And I quickly had a look for some that I could find that was quite interesting of the groups that does exist out there. And this is one for the car companies that are out there. So if we look at Mercedes here on the left-hand side, you'll see that they will probably have Mercedes and they'll have Smart and Mercedes-Benz, if I can just make it up at this point. They'll probably have a lot of different regions and a lot of different areas, but those are the only two that will come in. But if I look at Stellantis here at the top, they are actually the 4th largest automaker. So they have quite a big group if you look at all the different ones that they have in there. And also if you look at Volkswagen here at the bottom, also have quite a few. So if you could have imagined that all these could have consoled in, yes, absolutely. You would have done Honda, Sala, Hyundai, Ford, all of them separately with their subsidiaries, and that would then be your console file. So the principles of the console stays the same from the top down, and whatever you do in the subsidiary you would want to do in the console. So let's go through a practical file that I can show you how it looks. And I'm going to open my Mr. and Mrs. D file. Here we go. And if you go into your engagement and if you go in consolidate, that is where your consolidation structure will sit. Now, what is very important here is you'll have your file at the top, which is your console file, and then you'll have all your entities below that. It doesn't really matter how you set that structure up. So if you would want, so in my structure here, I had parent, which is the parent company, and then I had Olive, Sam, and James as my 3 subsidiaries. I could have done it on this level, or I could have done it as a level down. It is important that your holding company is a separate line. And why that is important is in your console file, you show your holding company figures, and then you show your console figures. If you include, if your IFRS for SME level, the top level, is your holding company, then you cannot split out the rest out of it to just show your holding company. It will include your eliminating entries. It will include all of that. So ideally, you want your IFRS for SME or your file. That will be your console figures, which includes everything at the bottom. And then your parent will be the one that's separate. But how you do it, like in the levels that it is now, or like I say, if you move it a level up or down, that wouldn't make a difference. The important thing is that everything should be under IFRS for SME and your parent should be a separate line. Now, if I go in here, you'll see here, there's a little caseware icon here, which looks like it's broken. And that's why I've moved this file. So now it doesn't link up to where this was originally saved. So that is why it's giving me that broken file. So if I would want to, you can go to this properties here. And then here you can go and browse and you can just relink it again. You can also, if I click here on none, you can also link a file that you haven't prepared. So say you have prepared it, but, another auditor has prepared it, but you want to put it into your console as part of the console, you can use the Excel file also to do so if you can't get access to the file. Now, these boxes here at the bottom is quite important, especially for the second year. So I'm going to go through the ones that are important, that you understand what the expectation is when you do tick them, especially like I say on your console for the second year, that you don't have your prior year numbers that change, etc. So the first one is include prior balances. So you will only use include prior balances the first year that you do your console. Because then you would say, right, I'm setting up this console. It's a new client from mine. I want my current year and my prior year balances, and I want to tick that. If you have done a year end and you're now doing the second year of your console file, you will not tick that, because what it will do is it will import your subsidiary numbers from the subsidiary files and then override, in essence, your prior console, which has been signed off. So if you do your roll forward for a second year console, you will almost never tick that. I can't see for a use case where you would tick that because your console numbers are going to change. So very, very, very important. We do get quite a bit of clients that are like, I've done my console, I've linked my files, and now I've actually checked my console figures. I was happy with it when I've done this, and now my figures have changed. If you are in the situation that you have done it, 2 options. The first one, hopefully you've made a backup before you update it and roll forward, so you can just use your backup file, make sure you untick it. Or the alternative, if you have maybe done a progression of work already and you don't want to redo it, it's going to take you quite a long time to do it. So the other option would be is to pass all your eliminating entries again. Now remember, and let me just quickly go out here, you can also import your journals, right? So if you go here into import Excel file, where you will import your TB normally, you can also here click on adjusting journal entries and you can import your journals. So I've done once done a console that had like 150 journals. There was no way I was going to process them again. If you have your layout right, then you can just import them, and then it's much easier to at least start from that. if you do import them, they will be on your normal journal screen available. So you can go there and you can go and change them again if you want to, or a number must maybe be amended or whatever the case might be. But that's an option that you do have. If you maybe have a large console, if you've already done a lot, your prior numbers then got broken along the way, you don't want to do a re-roll forward, then you can go and just pass your prior journals again. And you'll just pass them all as eliminating entries, but with a prior date. So then if I go back into my properties, so the budget forecast custom balances is not functions that we really use for financial statements for the corporate market and for our audit market. So I'm not going to go through them. They're a bit more used in our public sector market. Then you have this zero accounts, and then you have this account synchronization. Now this one is the other one. It's also quite important. So if I, again, do my first year file, if you untick that, then none of your subsidiary accounts would be mapped because it would just take, it would say it's unmapped. So what that does, it takes the mapping of the subsidiary and it brings it into your file, which you would want because you would want it to be aligned. But now what happens is I've now done my console in year one, and now while I'm doing it, I've remapped some items. So for example, in my subsidiary A, I had other payables 1 that I used for employee cost, but then in another file, I used other payables 2. So just by the matter of how I map differently in the two subsidiaries, I would remap on the console file to make sure that line is the same. And that is another good tip. If you can set up your mapping in your subsidiaries to be the same as in your console, as per my example now, especially your other expenses, your other payables, your other receivables, or even your loans for that matter, it does make it much easier on console because then those lines already line up. Otherwise, you'll have to, in your console, manually go and adjust them. But say you did go through the journey to manually go and adjust them, and you didn't go back to your subsidiary file to change, which a lot of us won't do, then if you tick that box again, it will bring in your mapping from your subsidiary. So if, again, I've done year one, I'm happy with it, or even in year one, actually, then in year two, you will have to go and remap them again to be right in your console file because it's now bringing in what your subsidiary mapping is. Now, there is a pro and a con to this one, because if I now untick that, and I say I don't want to synchronize because I've actually done a lot of mapping on my console file, then what would happen is if I then go to my my subsidiary file and there's a lot of new accounts that I've mapped there, then those will be unmapped on my console file because I told it not to synchronize it, right? So it depends on which way it is the easiest for you to do. So if you have a lot of new accounts in your subsidiary file, or even maybe that it has a new TB or a lot of divisions added, then I would say enable account synchronization might be easier, and then you just have to go and double check what did you map differently between the subsidiary and console in the prior, and that might be easier to do. If you don't have new accounts or very few, and on the console side you had to realign a lot of the mapping, then I would go the other way. So it really depends on which way you go with that. But very, very important is those two. So prior balances and enable account synchronization is the two that really makes a difference. And then we have clients that will be like, my console didn't work as expected, normally comes down to those two tick boxes. And also, like most files, before you roll forward or update, it does automatically do a backup. We do recommend to do a backup, because then if you do realize, oh, yeah, I have unticked it or ticked it and I shouldn't have, then you can just go back to your backup file. Okay, if I go then just a worksheet that I want to show you that is quite handy to have is this consolidation worksheet that you have here. So if I open that up, what it does, it actually stacks up all your entities next to each other, and then it does your eliminating entries. Now, you can use this per, let me just go back. You can go and change it here if you right click in your properties. Then you can say you want it by lead sheet, or you can have it per mapping number. So it just depends on what your preference is. but I now have it per mapping number. So what it means is this parent line here is the one that you will see on your holding company side. And then parent plus Olivia plus Sam plus James gives you your total, minus plus your eliminating entry gives you your consolidated. And that consolidated is what you will see on the face of your financials. So this is really quite a nice stack up that you can use to double check your figures and what is mapped and what not. It is important to note for the subsidiaries, Olivia, Sam, James, but also for the parent, any normal journals will be already included in here. So say in Olivia, I have posted a journal between loan and bank. That will be included in the 830 and the 200 already. So these figures are after normal adjusting journals before eliminating entries. So say I go and process now one eliminating entry. I think I have got one here. Let's make this eliminating. Then I'll go back to my console worksheet. Then you'll see here on this line, I have my investments in subs here. Now I can see the minus 400 comes out there, the 400 comes out of there, and then I'm left there with 800 and 1,900. So that will be then what is on my face. So let's go to look at my investment in subs. This one. So if I go investment in subs, there's my 800 and my 1,200. So let me quickly jump back there. So there's my 1,200, that is my parent company, and there's my 800, which is my console. It's a really very handy worksheet to have if you do consoles. The other thing that I do want to show is your column settings. So if you go to options, sorry, I was a bit quick there, options, column settings, then you'll have this here. And because you have this structure here, like you can see, it doesn't matter on what level you are on that screen that I showed you now, you can choose which one is your holding company. So say parent, it's Sam, is the holding company, then you'll see my numbers here at the bottom automatically change. Sam doesn't have a lot in it, but there is a loan with Sam. So then that is Sam. On the right-hand side, on the left-hand side, then you also have the structure again, and then there you will pick this. But just to my point, say I have put my parents' TB in here, you won't be able to split the other ones out like I can here now, Sam or parent. You will have to pick this one, which would then include also your eliminating entries. Okay. I'm just checking my notes here if there's anything else on consoles, but no, that was what I wanted to cover on consoles. I'm going to have a look if there's any questions. We did have a few questions about PowerPoint. Angela did drop it for us in the handouts, so you can download it there if you would want to. And I'm going to give it a minute just to see if there's any questions on consoles coming through. So I've got a question here. Thank you, Jason. Is there any way that you can change the setup of the console after it has been made already? So yes, Jason, you can. You can add, and I can actually show you that. So say you want to, let's go back into Mr. and Mrs. D. So say now I have a new subsidiary this year. Then I'll just go click on there, and I'm going to say this is my new subsidiary for demo. This one I don't have the file for, so I'm going to click no, and I'm going to say OK, and then that will be there as well. So you can definitely change it after it has been set up, because we do know consoles change constantly, right? The only thing that you have to be aware of is, say, for example, I sold Sam, he's not part of the console anymore, then I wouldn't go and delete him immediately, because I would want Sam to stay there for the prior year numbers, right? So I will then, for the current year, just leave the numbers or leave Sam there. I'll probably will, to be safe, unlink it here to a file, and I'll just go to none and not import anything, just so that I have the prior numbers. So before you delete one, just be very cognizant of what that's going to do to your prior numbers. I would rather, to be safe, almost deactivate it by just changing your properties here to none, then deleting it, and then when you're sure it's safe, you can go and delete it then, just because it affects your prior numbers. But you can, yeah, absolutely add it. Okay. So if there's any other questions. Okay, doesn't look like there is any more questions. I'm just going to wrap up the last few and then I'll give it 5 more minutes if there is any. So again, thank you everybody for joining us. It has been a journey and I hope you have found benefit in the session and the previous session as well as the online e-learning. If you haven't done the e-learning, I really would motivate you again just to go and do it in your own time, 1 video a day. It really will build your foundation of case in the financial statement substantially. We will be sending out a mail in the next week just with all the resources on there, like where the videos are, where our online learning is, where the community page is. So please have a look out on that. We will also include a short survey in there. Last year we did a survey in each and every session. We decided this year we're not going to do that. We'll just do one survey at the end. If you can please give us the feedback. We are doing the sessions for you, so it would be greatly beneficial if we know what we can do different, what you found valuable and what you didn't, or any other topics that you would like us to cover going forward, that we can also include that. So please have a look out on that. Then I would also like to again just highlight our case fee support if you need any help. We do have extended support hours. We have done it from 7 to 7 for our early risers or late workers. You can also book a consultant. So if you go to scan the QR code, you can go to the community page and there's to book a consultant. You can click here. If you click there, you get like a calendar link and you can book it at a time that's convenient for you. So that really helps if you're super busy and you have only a specific time that helps. And then please just don't book 5 sessions. There's limited amounts. So book 1 session at a time, that we can try and help you as efficiently as possible and that we have sessions available for our other clients as well. And then we also have the chat with us button, which you can do online chatting with. Right. And that is it from me. So from myself and Angela, thank you very much. Hope you have a lovely day and we'll chat to you soon.